The AVP derivatives of Religare Securities joins us right now on the show to talk about what kind of trades, if at all, can you take for the big event tomorrow. Needs no introduction, joins us right now on the show. Manoj, really good having you. It's been a while, but glad to have you on the show. Thanks for joining in. Now, it's a difficult thing, I know, but would you take any option trades on the index for the event tomorrow?
Good afternoon, Neeraj. Neeraj, the point here is, before you take any strategy on option before a big event, and obviously an event which comes once in, let's say, 5 odd years, and which has given you a 10% odd movement in the previous year, there are some calculations that we have to follow. Now, for example, if you're looking at FII stats, right from 5th of May, they have sold close to 6,000 odd crores, and that is when we had the expiry for VIX last Tuesday, and it was down 500 points. The IVs for at the money and out of the money call options, which were at 41, came down to 35. So what the FIIs have done is, by selling call and put options, they made 30% in the premium one single day, that is on Tuesday. But yesterday what they have done is, there is some shorting in 2,500 crores, that is for the June options. Usually before an event, to trade volatility, a lot of calendar spread, that is using the current month and next month option trades are done. So now if you see today the VIX is up 350 points, I guess 35.6 is what it is. A good strategy where we can expect the volatility to go up to 42 to 44. I'm saying the VIX index can go to 42 to 44, which says that the implied volatility for at the money or out of the money options can go as high as 52 to 56, which is currently at 44. Simply go ahead and buy a 7,300 call option, do a spread on that and sell a 7,700 call option. I'll tell you, a 73 would cost you around 175. You sell a 77 call option, which is 61 rupees. So the net spread that you get is 114 rupees. The target can be as good as 300. Now, for clients who don't want to write options, you just want to buy, if you see 75, 76, 77, and on the downside 7,000, 68, 69, all the strikes are active. But then I feel usually you buy a long strangle, that is, you buy a 77 call and a 68 put. The combination will give you a good reward. So you can either buy that or go with a call spread, as I said.
I mean, just trying to simplify this for our viewers. So you are saying buy the 7,000 call at the current market price and sell the 7,700 call at the current market price, right?
Yeah, I'm saying buy the 7,300 call option at the current market price and sell a 7,700 call option at the current market price. That is correct.
Does strategy make money at any particular level on the Nifty?
Yes. Now, Neeraj, it's a very good question. The most important part is Monday after the market opens, this VIX, which I was saying will go to, let's say, 42 or 44, will be down at 28. So what I'm trying to say is, whatever level the Nifty is, the sum of the call and put options of the Nifty, even if you are at 75 or at 65, the total sum and call and put option would be around 380 to 390 rupees. That is a fair value calculation. So what I'm saying, this 75 call option, which is somewhere close to a 175 odd, would be at somewhere close to a 280 to 290, and the 77 call, which we are selling at 61, the price of that will come down to maybe a 22 or 23. So that is where we can reward, because out of the money options, the volatility will come down from the so-called 45 or 48 to a good level of 26. The reason why I'm saying 26 is because we have an expiry the very next day after Monday, which is on Tuesday, and the VIX futures for that Tuesday is trading at 23 to 24. And if you look into the June options, the IVs are at 26. Right. So roughly around 26 would be the IVs.
Manoj, what are your strategies on the Gujarat-based stocks, Adani group of stocks, GMDC, IRB, Jain Irrigation? Is there any strategy that you have for ahead of the big event?
Yes, obviously these are all stocks which are sentiment driven, but then if you go into the derivative data, where the net cash position which has been taken to the net derivative long position, the risk reward, if it is proportion, it is at Adani Power, which is at 54. It's a good stock. Even at this level we can buy somewhere close to 54. Obviously the stop loss for intraday would be, let's say, 51, and for a swing trade of 2 days we can expect a good level of 61. So that is close to around 16 to 18% more on the upside.